Ladies and gentlemen, Kim here, and welcome to the Daily Update. Hope you guys had a good day trading today. Market is down about 0.4% there. On the S&P Nasdaq did the same along with the semiconductor Dow, also down about 0.3% today. However, we see that Russell 2000 transport, notably the energy and utilities printing green numbers in this lethargic day. Banks down about 1%. The biotech is also down 1% along with the healthcare. Home is down 0.3%. Retail 0.8% negative. Emerging market down a little bit. Bitcoin down. Gold, silver, miners. These guys are up about a 1% or so today. Dollar up. Oil up. Treasury bond pretty much flat. VIX is also flat there. Let's do it. S&P 500 ETF. Spider. 65-minute chart. Here's so this is where we closed yesterday, and it looks like we opened up right over here, and so you can see we actually saw that gap up that buyers desperately needed to see today. However, problem was buyers were not able to fill the entirety of that down gap from yesterday morning. And so what we see right now is that we have a very similar price action to what we saw just a couple days ago, where buyers failed to fill the entirety of the down gap and things became very hectic for the bulls. And you can see right here, the gap wasn't fully filled through that hand or the shooting star candle there. A similar price action. We gapped up, nice up move on the first hour at open. And you can see that down gap was not fully filled. Not to mention my micro-term moving average was right there to kind of slap the buyers down. And you can see through that doji reversal candle here. And that was it all day long. The price deteriorated it, and the bears continues to push with the weakness they smelled on that first hour. You can see we came down. We did throw the hammer candle though on the last hour. So this hammer candle is the opposite of this shooting star light candle right here, right? So we do see a follow through at least first 2 hours of tomorrow. We may see something out of this candle. However, without the follow through, that candle could mean absolutely nothing. I'm talking about that, you know, the impressive resume guy right here, the midterm moving average. And this guy is still, we're trying to figure out if this guy is gonna support the buyers or not, because for the first time since early January, this thing is slightly rising here, right? You can see it's been declining for 2-3 months straight, and we see that little bit of that trajectory to the upside, and bears managed to bring it down. And we're just kind of right in that vicinity. And I also talked about the fact that bears have this downtrend going on short term, right? With the lower highs and lower lows. And with that, we must give some wiggle room. Remember, we talked about that yesterday, right? So you don't want to be too precise with the level of that midterm moving average or the support. We want to see if the buyers can able to hold this band of support. We're talking 438 and 434. So this is a level bulls can potentially bring it up. And with these down gaps that are open, obviously the boss bears who retreated to this level right here, they're taking their troops and bringing it down. And in that process, opened up 3 other down gaps. And as long as these down gaps are open, there's going to be a lot of pressure coming from the bears. So for the bulls to kind of counterattack that. You can't just gap up for first hour. And that's what we saw today, right? And then kind of fizzle and not showing any kind of strength. Of course, man, bears are going to bring it down because they have all the momentum, all the strength, and all the confidence. So if we do see any kind of up move tomorrow, anytime this week, we must see some strength and follow through. Ultimately, this is a level where the bulls need to get up and fill both of those gaps if they ever want to go back up here 460 to battle the final battle of the boss bears, right? And some might argue, we got some enthusiastic buyers out there. Some might argue this might be that inverted head and shoulder formation only if the buyers can cultivate that right shoulder. And as of today, we don't have any evidence of that. Let's check out that oscillator, see if we can extract any more information. So I thought it was a little bit interesting because you know, the market has been coming down the last couple of days right here, especially with the down gap yesterday morning. Only uptick we had was probably this morning right here. And yet, oscillator is acting a little strange right now because despite the fact that we did see, you can see here 1, 2, 3, 4 hours of downturn today. That oscillator does not want to cross down. And if you've been following my videos, we've seen this kind of incident happening time to time. Not often, but it happens. And everybody kind of scratching their head, what's wrong? Your oscillator is broken. And then we don't really notice it until days later. So what it is that oscillator's kind of telling us something right here. If we do see this oscillator crossing back and never crossing, because we haven't crossed yet, you can see that here, that oscillator not crossed down. It actually crossed up this morning with that gap up. But again, that gap got faded pretty quickly and got filled, but that oscillator is not admitting the fact that we did see that deterioration last 4 hours straight. There's something going on. What are we doing here? Well, we got the lower lows in the price action. But that oscillator is showing us slight higher lows here. And this is kind of the opposite from what we saw right here. You see what I'm saying? Right there. You see these higher highs on the price action? Yes or no? Yes. And we got the lower highs on the oscillator. And bears were able to bring it down, you know, in the pretty much the last couple of weeks. Basically, what we're seeing right now is kind of the opposite side of that. While the bears are cultivating these lower lows, this oscillator is kind of supporting the buyers. Obviously, all signals can fail. So if bulls can kind of utilize this, especially the fact that we are trading very near, we're actually right on that mid-term moving average, the impressive resume, guys. So if we can see that impressive resume guy pushing up the price while this oscillator gets back up to the top of his band and ultimately break above this falling resistance on that oscillator, we're talking we have enough energy that's been built. This is a coiling setup. We've talked about this before. If this oscillator actually breaks out, this is a type of setup where we have enough energy built up right here that bulls are not just going for 460 right now. If bulls are scheming, some bulls are strategizing, they're not just going after the boss bears. They're going after the new all-time highs. And this is the kind of the setup that bulls can able to do it. However, we first need to see evidences of that. And bears are terrified to see this setup unfolding. So what the bears need to do, and if you're a bear and you've been enjoying this rally right here to the downside, you must kill that momentum by bring this down the oscillator to the bottom of its span, and don't let it get up, and let it stay down for a week straight and keep pushing the market down. It's gonna come back for you. We'll reassess the situation. Enjoy your evening and good luck trading tomorrow.